Welcome to Business Innovators Radio, featuring industry influencers and trendsetters sharing proven strategies to help you build a better life right now.
This is Tammy Patzer, and today's guest is Tim Voit. He is a financial analyst and managing partner of Voit Econometrics Group, Incorporated. Tim Voit has been involved in researching pension plans for valuation or QDROs purposes, in addition to assisting law firms in dividing retirement benefits on private, military, and governmental plans. Tim is also a court-admitted expert on pension-related issues, along with being retained as an expert in malpractice cases on behalf of the insured to analyze and fix poorly drafted QDROs. If you haven't guessed, our topic today is qualified domestic relations orders and why people must consider them when they're getting a divorce. Welcome, Tim.
Thank you.
If you can start out by explaining to us what a QDRO is and why it's important for people to understand what they are and how they work during a divorce.
Well, a qualified domestic relations order, or QDRO, is really a court order set of instructions designed or directed to retirement plan administrators. So it only really has to do with qualified retirement plans. But I have to say that the retirement plans tend to be the largest marital asset, oftentimes worth more than the homes the parties live in. So it is, even though it's the largest marital asset, it's also the most misunderstood financial asset in a marriage or pending divorce.
So do these often, do they ever get overlooked in a divorce proceedings?
Well, yes, or they're put off until after the divorce, meaning that oftentimes the attorneys will put in a simple sentence in a settlement agreement that says pensions to be divided 50-50 without realizing or knowing what type of plan it is. You have your generic 401k plans with account balances, but you also have pension plans that pay out a lifetime stream of income. Those pension plans are often overlooked because people don't get quarterly statements or anything like that on them. And those pension plans, even though it might be $500 a month or $1,000 a month for the rest of someone's life, it can be worth quite a bit more than a 401k balance. So those the plans are overlooked. Sometimes the QDROs are not really considered. And again, it only pertains to the retirement plans. But the real issue is oftentimes this is left to the spouse receiving a share of the pension. And it's usually well after the divorce when really it should be entered at the time of divorce to avoid any problems.
So in a divorce, sometimes there are children involved. Are there alternative payees in a QDRO?
Well, yes, actually a definition of an alternate payee is spouse, former spouse, or dependent. So I guess one question people might have is, well, who can be an alternate payee in a qualified domestic relations order when it involves a retirement plan? Again, it can only be a spouse, former spouse, or dependent. And that dependent, well, let me back up. The QDRO was also used for three purposes: alimony, payment of child support, or because the retirement plan is being divided as a marital asset. So when it comes to definition of an alternate pay, the dependent typically is a dependent child.
So with children, so if I were married and getting a divorce and I had children, and let's say the person like suddenly quits their job or something, is this a way to get child support when maybe they don't have money coming in? Can you dip into the retirement to get child support for happening now? So can you give me some examples of how that would work?
Well, sure. Actually, the QDROs are used 99% of the time for dividing retirement plans as marital assets because they're really no different than a savings account. So it's divided as a marital asset, and not very many people know, or the courts for that matter, realize that you can tap into retirement plans to pay off child support or pay current child support. And as far as examples, I have a number of examples, but one that just off the top of my head is a woman in Alabama who had 4 kids, and the father had left and owed child support on 4 kids over 10 years. That amounted to about $160,000. Now, he fortunately went to a different state, but he went to work for a company and accumulated this 401k account balance. There's roughly about $200,000 in his 401k when they found out where he was and who he worked for. Well, we were able to draft a qualified domestic relations order to get the $160,000 out of his 401k and paid to her. And what's interesting is because child support's not taxable to the custodial parent, he got hit with the tax consequences. That was about $40,000 in taxes. So she pretty much got all of his 401k for the payment of child support arrearages. And it's not anything bad. I mean, I don't think in terms of slanting it one way or the other. On the positive side, if the non-custodial parent doesn't have the means to pay child support, or they sometimes I hear I have $30 to my name after child support and taxes. Well, if they're sitting on a large illiquid asset like a 401k, they could actually ask the court, can I just pay the child support out of my 401k and draft a QDRO so that the custodial parent receives a distribution from a 401k. Now, the pension plans are a little bit different because they're designed to pay out a monthly pension beginning at some retirement age in the future. So you have to be careful with the type of plan. There's either pension plans or what we say defined contribution plans, 401ks, profit sharing plans, which do allow for lump sum distributions. I hope that answers your question.
Well, I just find it very interesting because I don't know. I know I personally did not know that you could tap into a retirement plan to pay child support. So, I'm just fascinated by this entire concept that you can, I guess, take money that was set aside for something else and use it for something that you should be taking care of right now. So I think that's really interesting. And I think you told me previously that unpaid child support is like in the excess of $16 billion a year, and with $96 billion outstanding, I can imagine how many people listening to this interview, if they got this information, they could go talk to their advisor or their attorney, and say, hey, can we look into this? How many lives could be changed and children's lives that could be improved? That is really interesting. So the QDRO is an important document, and I know you're an expert in this type of field. If somebody is looking for someone to help them get a QDRO, who should they be looking for?
Well, you mentioned financial advisor, which is who I would not suggest because most often they're not going to be familiar with the ins and outs of a qualified domestic relations order, unfortunately. But it has to be someone that this is all they do every day, all day, because a slight change in verbiage, as I mentioned, the QDRO is a set of instructions to the plan. Well, there's thousands of retirement plans out there, and it's the plan administrator that actually qualifies the domestic relations order. Three major players in the development of QDROs back in 1984. That was the IRS, Department of Labor, and the individual plan administrators. They gave the upper hand to the plan administrators because of the different features or benefits that they offer. So they're the ones that actually have to approve of the QDRO or the language in the QDRO. I used to teach a class on this, and I used to say a slight change in verbiage can mean tens of thousands of dollars difference to one party or the other. So it's critical that whoever prepares the QDRO is someone that has a lot of experience. This is something they do all the time and has the background. You certainly wouldn't want to go to an attorney that professes to be an expert and they have an undergrad degree in political science. I mean, you really want to interview them and find out what their background is if they're the ones that are holding themselves out to be experts. Because, as I mentioned, we get involved by the insurance carrier to fix these, and oftentimes people or professionals with different backgrounds will hold themselves out to be QDRO experts, and yet I had one case where an attorney hired another attorney to draft an order. The wife received $255,000 when she was really only supposed to receive $124,000 because they used the wrong valuation date. Understanding how plans carve out the benefits or carve up these accounts is important. So it's not so much whether someone has a law degree or a background in this or that. It comes down to having a good educational background, but also the experience.
So there are actually certified QDRO specialists and analysts?
Yes, that's a certification program for getting a rigorous exam or course, and it's to get whether they're financial planners, divorce planners, human resources personnel, paralegals and attorneys. If they're in this business of drafting QDROs, it's really a must to get something that says you're qualified to be drafting these orders. Because I got to emphasize that there's a difference between the private sector, the military, and the federal government or any government plan. What is recognized by some plans may mean something entirely different to another plan. So it presents a whole host of other issues, and I'm not sure we have the time for that.
Well, go ahead. If you could give just a brief difference, say, between the three different types, like you mentioned, military versus the government, and then I guess a regular plan. What are the primary differences? Maybe one or two primary differences, which may not be enough to explain it.
Well, I'll try to make it interesting.
Okay.
When Congress passed legislation creating QDROs, they exempt themselves from what they imposed on the private sector. So in the private sector, a QDRO can be entered before someone retires, where the alternate payee, again, whether it's a spouse, former spouse, or dependent, receives a separate interest. Doesn't matter if the plan participant's spouse dies, they're going to get their money. That's a separate interest, and it only applies to the private sector. But again, I said Congress exempt themselves, meaning the government and military plans, and it only imposed, that term QDRO really applies to the private sector. But the military and the federal government accept the functional equivalent of a qualified domestic relations order, but they call it something else. For instance, court order acceptable for processing, a COAP for the federal government. Now, I mentioned that, that the private sector you can have a separate interest, but the military you cannot, and a spouse can only share in the benefit when it's paid. Where in the private sector, a person can get the money before the other retires, so long as they're beyond the normal retirement age. But federal government and the military do not allow that. They have the spouse has to wait until the military member or federal employee actually retires before they start receiving their share. Another thing is the military, they can only have one surviving spouse or beneficiary to the retirement plan. And that's important because that's often overlooked. Survivor benefits. You have to ask yourself, what happens to the money if one or the other party dies? That's a question that's typically never asked or an issue that's never addressed in a settlement agreement. What happens if the person with the plan dies? What happens to the alternate payee's share? So there's another issue of survivor benefits that would have to come up or be addressed. But the federal government apportions survivor benefits. You can have a current spouse covered, you can have a former spouse covered, but the military only allows one surviving spouse. So those are some of the subtle differences. Government plans, they have cost of living adjustments. Private sector, typically not. Those are the people that, when you hear on the radio, fixed incomes, things like that, that's generally people that have private sector pensions.
Wow. I mean, this is such a interesting and complex issue. And like you said, you are, this is what you do day in and day out. You're focused on these QDROs. So if somebody needs to contact you or get more information, where can they do that?
Well, we've had a website for quite a few years, over 20 years. It's www.becon, that's B like in Victor, econ.com. And there's quite a bit of information on there that's downloadable or useful tools for an attorney, for discovery purposes, things like that. There's the certification programs are through the American Association of Certified QDRO Professionals. That's aacqp.org.
And you can get that information at your website too?
Not at our website, but if you go to their website, you can.
Okay. I'll make sure to put the link to both your website and the aacqp.org site also, so that everybody can find out more information. I'm sure that there is a lot more that we could be talking about, but I think it's such a complex issue that I'll go ahead and let people think about this. So, Tim, is there anything else you think is important that maybe I missed and didn't ask you?
Only when it comes to selecting an attorney, if someone's contemplating divorce, they really, just like the QDROs, they should select an attorney that this is all they do every day is divorce-related issues, because they're going to be up on a case law. Just like selecting a QDRO expert, you want someone that's up on the case law in the state that their divorce is occurring. All these states are different. It's the states that define what is marital and what's not marital. And it's also not the plan that determines who is entitled to what. It's up to the individual states or the courts of those states to tell or determine who's entitled to something. So if you hear, if the listeners hear people say the plan said I'm not entitled to this or that, that's not a good statement to make, because it's really up to the courts in each individual state to determine the issue of entitlement.
So be sure to go to court to make sure that you're getting everything you're entitled to.
Well, you don't necessarily have to go to court as in go in a trial. You just there's one other. If the listeners are non-attorneys, or whether they're financial professionals or CPAs, there's versuslaw.com that you can look up. You have to subscribe to it, but I tell people if you want to sign up for it, it's a few dollars. It used to be $8 a month. It might be $18 a month, but it's a good source for case law research. You look up any state and determine how the states view marital assets or retirement plans in general. Another one for if there's quadro distributions and investment-related issues, AAII.org, American Association of Individual Investors, good source of information for investments or rollovers, rather than just trusting going down the street to a bank or investment firm and asking them how to handle a quadro distribution. It's a little bit different than a typical distribution.
Okay, so the big thing is to go find somebody who knows what they're doing, because it's not simple. I think that's my takeaway in from a layman's point of view. It's exactly. Like you have to find somebody who really understands this, because like you said in the very beginning, sometimes the retirement assets are bigger than the home or any of the other existing assets. And so if you're not aware of it, you could be literally leaving money on the table or not getting your fair share in a distribution situation. Is that an accurate takeaway?
Absolutely. Couldn't have said it better myself. And then the only other thing is that just to make people aware, and this comes down to how we wrote about it in the first place, was NFL football players. I had someone say, well, you can't go after him because he lives in a different state. And we said, well, that's not true for child support. So the only other thing, that's a great takeaway. I would just like to, more people need to be aware that you can tap into retirement plans to pay off child support or pay child support using a qualified domestic relations order.
Yeah, I think that is really important. If I had known that, I probably could have gotten more money for my daughter when she was growing up, when my ex was not paying me any child support because he worked for a big company.
I have another example. I have a bank executive that was in prison or incarcerated for embezzlement. And he knew that his retirement plans were protected. Nobody can touch a person's retirement plan under any circumstances, not even bankruptcy. So they're protected. And he thought he would get out of prison and have this big 401k. Well, we informed the attorneys he could tap into that 401k every year to pay the current child support. And that's what they did. They used the 401k, since he was incarcerated, to pay the child support on his kids. I'm sure he didn't have anything left when he got out of prison, though. Interesting story.
Yeah, I bet that you could probably come up with all kinds of stories about people who thought that they would, get away with not having to deal with different obligations, and then they find out that they have these big retirement accounts and everything. Well, Tim, I really appreciate all the time that you took with me today to explain the QDROs, the Qualified Domestic Relations Orders. I certainly learned a lot, and I'm sure that everyone listening learned a lot too. And I would like to invite you back another time to talk about some other issues related to divorce. So I hope that you'll consider that. And I really, really appreciate all your time.
Sure. I appreciate it as well, and it was nice talking to you today.
This is Tammy Patzer. Oh, go ahead.
Oh, no, I said I look forward to it.
Oh, good. This is Tammy Patzer. Go make it a great day.
Thanks for listening to Business Innovators Radio. To hear all episodes featuring leading industry influencers and trendsetters, visit us online at businessinnovatorsradio.com today.